Assalamualaikum and welcome to my Bankers Learning Academy. Today the topic whichever I'd like to discuss the standby letter of credit or international bank guarantee and its operational procedures. For the better understanding and the better comprehensiveness, I would like to divide the video is two part. Video one, I basically delivered the basic concept on the international international bank guarantee or standby letter of credit. And in the second video, I would like to describe its operational procedures. In the banking diploma, international trade finance and foreign exchange module, the last 97th examination, a full question is come from this topics. What is the standard? What is international? What is standby letter of credit and its operational procedures in banking industry? And how it influence on the trade business. However, first of all, I would like to discuss what is the basic concept on the. In the first video, I would like to deliver the clear concept on the standby letter of credit or international bank guarantee or international letter of guarantee, and basic concept on the of LC, SBLC, and international bank guarantee. And in the second part, I would like to discuss what is the difference between the letter of credit and standby letter of credit. On the other hand, what is the difference between the standby letter of credit and international bank guarantee or international letter of guarantee. And what are the common purposes of the standby letter of credit, and how many parties are involved with the standby letter of credit, and how it influences of the trade transaction or trade finance. And finally, what is the international regulation to operate the standby letter of credit or international bank guarantee? So now I would like to discuss what is standby letter of credit. First of all, standby letter of credit or international bank guarantee is one of the most popular service or the products of the international banking systems. And banking systems, international banking systems, the basic service or products of the international banking systems provide them the following products or services, and conducted by the following products or services like documentary letter of credit, that means the letter of credit or LC, standby letter of credit or SBLC, international bank guarantee or IBG, the bankers acceptance, multiple currency credit lines, and the euro note issuance facilities. So now here we would like to describe that how the international banking systems work. It is mentioned in this slide. Now I would like to what is the basic concept of the letter of credit or standby letter of credit or international bank guarantee or international letter of guarantee. Basically, the letter of credit or LC, SBLC, and international bank guarantee are the undertaken, or the commitment, or the basically it is given by the commitment of a issuer. Moreover, there is some difference between the letter of credit, SBLC, and international bank guarantee. First of all, I would like to know what is LC. LC basically is an payment undertaken whichever is given by the issuing bank on favor of the on behalf of the applicant or importer or the buyer in favor to the seller or the exporter and against the complying presentation of the stipulated documents, whereas the LC issued by the bank on behalf of the importer in favor to the exporter, and document is issued to after delivery the goods or the shipment of the goods, the exporter has submitted the documents to its bank, and finally the documents is sent to the bank. Bank means issuing bank, and it is it is especially applicable to the rules of a UCBDC usually is used. So letter of credit is the contingent obligation or intent to be paid and payment directly. And here the payment is directly after the fulfillment of the condition, which was done by the issuing bank. Against the and payment is done against the complying presentation of the stipulated documents. And stipulated documents means the documents of whichever is wanted by the issuing bank to the exporter for making the payment is called the stipulated documents. And the LC is issued by the bank on behalf of the importer in favor to the exporter. I have already mentioned this. And which is different from the SBLC? How? SBLC is also a contingent obligation. This is the similarity with the letter of credit, or intended to be performed or the paid. the first of all, the LC was only intended to be paid, whereas the SBLC is intended to be performed for the pay. And payment, the LC is the direct payment undertaken given by the bank, and here is the SBLC, the payment undertaken, indirect payment undertaken whenever the case or events is a default to perform. SBLC is issued by the bank on behalf of the both exporter or importer, whereas the LC is issued by the bank specially and strictly on behalf of the importer, whereas the SBLC may be issued by the bank on behalf of the both exporter or the importer, in favor to the vice versa. Whereas the LC is in favor to the exporter, but in case of SBLC may be favored exporter or importer. And here for the payment, document is issued in favor to the buyer, not the bank. And the document is issued in favor to the buyer by the exporter, whereas in case of LC, the exporter is submitted to the documents to the exporter. Issuing to bank. And this here this applicable rules is International Standby Practice 98 or UCP. It may also be UCP 600, especially ISP 98. Whereas the international bank guarantee is similar to the standby letter of credit, but here is some slight difference with the standby letter of credit. And the international letter of guarantee or international bank guarantee is also a contingent obligation and intended to be performed for the payment, which is similar to the SBLC. And here the payment is the indirect payment undertaken whenever the event is whichever is performed when the case or event is a default. Letter of guarantee or international letter of guarantee or bank guarantee issued by the bank on behalf of both exporter and importer in favor to the vice versa, which is very similar to the standby letter of credit. And here the for the payment, document is issued in favor to the buyer, not in favor to the bank. And here the whichever is also similar to the standby letter of credit, but the applicable rules for the international bank guarantee, URDG, Uniform Rules for Demand Guarantee 758. Actually, this is the basic difference with the standby letter of credit and the international bank guarantee. However, next, what is the basic difference of LC and SBLC? I have already mentioned this the previous slide. And just simply I defined this here. First of all, as an underlining as a contract is conducted between the exporter and importer, and whenever exporter delivered the goods to the importer, then the exporter demand the standby letter LC, letter of credit, and on behalf of the bank and payment directly payment undertaken given by the bank, whoever is fulfill the condition, the bank is bound to pay to the exporter on behalf of the importer. Whereas this case is similarly done by the SBLC. Here, first of all, the underlining contract, and this contract is conducted between the exporter and an importer. In that sense, whenever the exporter is delivered the goods to the importer, and the importer receives the goods and satisfied, then he done the payment. Then the importer conducted the payment or make the payment. But if the importer, after receiving the goods by the importer, and the importer is not interested to make the payment, or anyhow it's a delay to make the payment, the exporter claim the payment to the bankers who issued the standby letter of credit. That means whenever the importer is failed to make the payment in favor to the exporter, then the standby letter of credit is performed. So this payment undertaken is indirectly payment undertaken, and which is performed whenever the event is default or the case will be default. This is the basic difference between the letter of credit and standby letter of credit. Actually, standby letter of credit is a contingent obligation and intended to be paid, whereas the standby letter of credit is also the contingent liability, but it's intended to be performed or the payment. It's intended to be performed or the payment. This is the basic difference between the LC and the standby letter of credit. Now, the differences between the SBLC and the international bank guarantee, especially SBLC and international bank guarantee are interchangeable, both to do the same work and to both serve the same purpose. SBLC first introduced by the UHA, which is similar to the bank guarantee, as it protects the buyer in case of the default. at the time of the payment by covering his or her liability, both the well-accepted banking protocols. Then what is the dissimilarity? Dissimilarity is the functional point of view, operational legal backup point of view, legal point of view, international bank guarantee, international bank guarantee, international legal point of view, international bank guarantee is a simple obligation subject to the civil law, and the rules of the URDG 758, which is published by the ICC, Whereas the SBLC is issued subject to the UCP, subject to the UCP or ISP 90 is UCP 600 or ISP 98. Basically, these are the legal point of view. This is the basic difference between the between the standby letter of credit and international bank guarantee. Significantly, SBLC and international bank guarantees are not tradable securities nor negligible instruments. They are not tradable securities, nor the tradable securities, nor the negotiable instrument. Those are not negotiable. Simply issued for a specific purpose, covering an underlying obligation, and this purpose and underlying obligation cannot be transferred to any on. This is the basic difference between international bank guarantee or international letter of guarantee and standby letter of credit or standard guarantee. So, from the above discussion, we can say what is the standby letter of credit. Actually, this definition is taken from the URDG 758 Article 2, the international bank guarantee or standby letter of international bank guarantee is a written undertaking or a promise or as a commitment whichever is given by the bank or the financial institution on behalf of the applicants or its customers, or the in favor to the beneficiary in the event of the default by the principal to cover the loss or the amount of the money within the limits of the stated sum of money. This is the basic definition of the international bank guarantee, whichever is given by the URDG 758 mentioning in the article number 2. Whereas the Contract Act 1872, as per Section 128, the bank guarantee is a contract whichever is given to perform the promise or discharge the liability of a third person in case of his default. This is the similar definition with the URDG article. And if we explain this definition by example, so we can say that a contractor and a Padda Beach authority, local authority of the Bangladesh, who is offered a who is called a tender to the contractor to participate the contract and selected to as a contractor, then the contractor is allowed to work in the Padda Beach activities. So first of all, they have make an underlying contract, and they are provide a condition is given by the Padda Beach authority to in order to participate the tender, he has to submit a bank guarantee. So the contractor has first of all come to the bank with the request to issue a bank guarantee in favor to the Padda Beach authority. Then the bank, as per its internal rules and regulation and guideline and the procedure, they issue a payment guarantee in favor to the Padda Beach authority. If the contractor is failed, to do the work as per the condition of the contract, then the Padda Beach authority they claim for the payment, and if the claim is genuine and authentic, the banker is bound to pay to the Padda Beach authority. This is the setup of the bank guarantee. Whenever this guarantee is set up in the parties are involved in the two different countries, then it is called the international bank guarantee, and this function is more or less similar to the standby letter of credit. However, I would like to types of the letter of guarantee or the standby letter of credit in the trade finance. Actually, in international bank guarantee or standby letter of credit, international bank guarantee. International bank guarantee or standby letter of credit is divided into two categories. Number one categories is exporter. Number one categories is exporter point of view, and number of categories is importer point of view. Exporter, first of all, the exporter point of view, the bank guarantee, international bank guarantee or standby letter of credit is three types. Purpose, as per purpose, the performance guarantee, warranty guarantee, and the retention money guarantee. Whereas the importer point of view, the bank guarantee or standby letter of credit is divided into 4 categories. Number 1 is a payment guarantee. Number 2 is a deferred payment guarantee. Number 3 is a guarantee for missing of a bill of lading, and the customs as a guarantee. These are the guarantee types which is issued in favor of different types of the purpose. So when sometimes the guarantee is issued on behalf of the exporter in favor to the importer, whereas sometimes the guarantee is issued on behalf of the importer in favor to the exporter. Now I would like from the above discussion, we can say that the bank guarantee is usually issued for the following basically the 3 types or purpose. Number one is the performance purpose. Number 2 is a payment purpose. Number 3 is the security purpose. The bank guarantees cover the following the 3 basic obligations. Number 1, performance purpose. Number 2, the payment purpose, and number 3 is the security purpose. This is the common 3 types of bank guarantee. And the international bank guarantee or standby letter of credit is how many parties and how it's operated. First of all, I would like the standby letter of credit or the international bank guarantee has the following 4 types of parties. First of all, in the previous slide, I have mentioned an example. So whenever a contract is conducted between the contractor and the further various authority. If the contractor, bank guarantor, and the beneficiaries both are is situated or located to the same country, this is called the local guarantee. And whereas the one party is located to outside the Bangladesh, this is called the international bank guarantee. And whenever this international bank guarantee is conducted, first of all, a principal or applicant, a contract is conducted between the principal or applicant and the beneficiaries. And after whenever the condition is imposed by the contract and the beneficiary wants a bank guarantee, then the applicant or the principal has to come to the bank with a request letter to issue a bank guarantee in favor to the beneficiaries. But if the beneficiaries and the guarantor are located to the 2 different countries, so the guarantor or the bank are not allowed to issue directly the guarantee in favor to the beneficiaries. So he has to first of all, he has to request a counter guarantee on behalf of the principal or its customers in favor to the another corresponding bank, where there has an arrangement or corresponding banking relationship with this bank. So the counter guarantee is issued in favor to the corresponding bank, who is finally issued a demand guarantee. And here the mention is here I would like to mention that the guarantee whoever is finally issued a demand guarantee, it's known as a guarantor, whereas the bank which has first of all issued a request letter on behalf of the applicant in favor to the as a guarantor, this bank name is the counter guarantor. So we can see that in the standby letter of credit or international bank guarantee, there are 4 parties are involved. Number one, principal or applicant. Number 2, beneficiaries or beneficiaries. Number 2 হচ্ছে counter. Number 3 হচ্ছে counter guarantor. Counter guarantor, এটা হচ্ছে counter guarantor. And number 4 means হচ্ছে কি whoever is issued the demand guarantee. So he is finally known as the guarantor. These are the 4th party which were directly involved with the international bank guarantor standby letter of credit. However, how to operate what are the legal backup of this guarantee, and how the influence of the international bank guarantor standby letter of credit in trade mechanism. There are certain example. First of all, I would like to mention that there is a sales contract conducted between the exporter and the importer. In that sense, that the exporter is supplied the goods in favor to the importer before receiving the payment from the importer. But the exporter or seller is very much anxious for his importer or not confident on the importer to making the payment after delivery the goods or the shipment of the goods. So the exporter or the seller demand a guarantee of a bank or financial institution as a form of international bank guarantor, the standby letter of credit. As per their discussion, the importer has to come to the bank with a request with a request in that sense, please provide a security for the for my payment to the seller, to his bank. The exporter take a application and mention this mention this language, and then the bank scrutinized. Then the bank scrutinized the application of the importer, scrutinize the application of the importer, and if the bank is satisfied on the request of the importer, then he is agreed to issue a international bank guarantee or the standby letter of credit. So the bank issued a international bank guarantee standby letter of credit and finally sent to the exporter. And whenever the importer receiving the goods and satisfied on the performance of this goods, he has to make a payment and send the payment in favor to the exporter. But in that case, if the importer is failed or any type of delay out of the contract, then the exporter claim for the payment in favor to the banker or guarantor. And as per the term and condition of the international bank guarantor standby letter of credit, bank guarantor is a guarantor means such a banker is bound to pay to him. On the other hand, this whenever the sales contract is a contract, make a contract in that sense that the importer first make a payment, then the exporter deliver the goods for shipment the goods in favor to the exporter. In that case, the exporter is very much, in that case, the importer is very much anxious and not a confident on whenever he make a contract, make a payment. If the exporter is failed to ship the goods or the or not maintain the quality of the goods, then the importer demand a bank guarantee, international bank guarantee or the standby letter of credit from the exporter. And then the exporter, in that case, the exporter goes to the similarly goes to the bank with an application or request. In that sense, please provide the security for my performance of a contract to the buyer. And whenever the bank receives the request in that language, the bank is scrutinized the application or the request of the exporter, and if the bank is satisfied to make a issue the guarantee, then he issue an SBLC in favor to the importer. So from this slide, we can see that a single guarantee may be used sometimes in favor of the exporter, sometimes in favor to the importer, sometimes on behalf of the exporter, sometimes on behalf of the importer. Whereas the LC only issued on favor of the importer or the buyer in favor on behalf of the importer or buyer in favor to the exporter. So we can conclude that the standby letter of credit or the international bank guarantee is a more powerful and significant the international trade mechanism. However, this international bank guarantee or the standby letter of credit is regulated by the international some rules or guidelines. For example, Uniform Customs and Practice of the Documentary Credit, UCP 600, article number 2. This guarantee is article number 1. UCP-DC is applicable also for LC and standby LC. This the rules is issued in for the LC or the standby LC. So UCP is a legal international legal regulatory framework for issuing the standby letter of credit. Especially standby letter of credit is issued in the light of the international standby practice. That means the ISP 98. Now, whereas the international bank guarantee is operated as per or in the light of the condition of the Uniform Rules and Demand Guarantee. That means URDG 758, which is issued by the ICC. Both the publication, they are the published by the ICC. So this is the basic concept of the international bank guarantee of the standby letter of credit. আসসালামু আলাইকুম, আজকে এই পর্যন্তই। যদি আপনার ভিডিও ভালো লাগে থাকে তাহলে আপনারা সাবস্ক্রাইব করে এর সাবসিকুয়েন্ট আমাদের